Hey traders, I am just here to give you a little bit of a weekend update and some actions that I'm taking this week. Kind of went back to the basics with the volatility in this market. Obviously, elections do affect the volatility, and usually in an election year, the market is going up versus declining until the election. And so that's what you can see is happening. We're having a really strong market. And there are some good opportunities, but there's also some volatility that is really hard to trade around short term. So myself, I have personally adjusted my style in this market setting to more of a longer term or swing trader versus, even 1 or 2 days. I'm moving to 1 or 2 weeks and sometimes even longer, and using more longer time frames to put on my trades and my setups. So that's just a little bit of how I'm adjusting to this market. Would love to hear from you if you guys have any ideas on how you've been adjusting to the volatility and making things work in this type of environment. Would love to hear it in the comments below. So I'll go over a few charts today. Really just want to give an overall idea of what's happening, and I have a few trades that I've taken on this week and plan to look into this coming week as well that I'll share with you. So overall, you can see the SPX, the S&P 500 at all-time highs. It had a brief dip back in August, and now it's just screaming higher. And the relative strength of it is a little less than prior uptrends. So something to watch for as it's moving to new highs. It's also not reaching back those same volume or relative strength indicators are not at the same level. In fact, they're lower, as you can see here on the bottom of this gray line, than they were even at a prior high, earlier in the year. So this on the right is the weekly calendar, and on the left is our daily. So we'll go by those two for now. All right, so looking over at the Qs, which is the NASDAQ, it is not at its as high yet. However, I do anticipate that before the election or by the election end of year, the Qs will match the movement in the S&P to some extent and probably make new highs as well. So I'm working around that thesis also. And additionally to that, lastly, let's take a look at the Russell 2000, and you can see it's well off of its highs. Obviously, they've had some setbacks with the rate situation over the past year plus. So rates have been pretty high. The Federal Reserve is cutting them, but this particular index is heavy in the banking and financial industry. So you can see it's not yet at its all-time high. And I personally am not going to chase this because rates actually are. While rates are being cut, the bond yields are still inching higher even now, which is an interesting paradox. And inflation is also still not completely down in the important areas that it needs to be down. So I'll be staying away from the financial stocks for the moment. So let's go over a couple. So overall, market's pretty strong, right? We're in an election year. Volatility, however, is high. Let me see if I have the VIX here that I can share with you, the VIX futures. And so you can see, interestingly enough here also, this is also kind of a divergence if you look at it, right? So the market was going up. The VIX is going up as well, which is an interesting dynamic, considering that usually doesn't happen, right? It's not a standard inverse relationship, but it doesn't usually happen. And so that is something to be mindful of. Like as volatility is increasing, it's going to be more expensive to buy options and things like that. So try to adjust your strategy and keep in mind your risk reward strategy as well. Personally, I like at least 2 to 1 or 3 to 1 or 1 to 2 or 1 to 3 risk to reward ratio at the minimum. Really, I like 1 to 3 in this environment. So I'm really looking for the premium or best type of trade setups here, if I can find them. So I've got a few to share with you that may not be the traditional like tech stocks or whatever. However, I will go over a couple of them. So some of the strong sectors in this environment, this rate environment, are healthcare, utilities, gold, things like that. So I do have a core. I've had a core gold position. I'll just share the GLD chart with you. Gold has been just doing great over the past couple of years. I have been long gold for some time, physically and in the GLD. So obviously adjusting around my position as it grows, but that has just been a really good position to hold in this type of a rate environment that we've been in. And as you can see, it's not going down. It is going up, even though rates, even though inflation is still up, rates are up and coming down. That's actually when gold thrives. So what I meant to say is, as bonds are coming down and yields are going up, even then rates are not affecting gold the way that you would expect it to. So there's a lot of interesting things happening in the market right now. Nothing is perfect. Nothing is a direct correlation all the time, but these are like traditional rules, so to speak. So gold is still really strong. Commodities in general have been really strong, including Bitcoin. I personally trade Bitcoin with the IBIT ETF. And you can see here that we're kind of in a flag formation, right? So let's talk about this. And Bitcoin as a commodity a little bit, right? So to me, I look at it as I look at gold somewhat. It's a limited supply. And it acts like a commodity a lot of times. So you can see here that it's been in this kind of flag formation over the past several months. This IBIT won't give you a full picture of the full Bitcoin, so I'll just go ahead and do a futures. Sorry for all the chart notes here, but you can see in the futures the more long-term view of Bitcoin. On the weekly, it's kind of made this very large move up from the bottom last year, and it is kind of consolidating with the anticipation of a potential breakout sometime in the future. A pretty good cup and handle formation. So I am looking at Bitcoin. I'm looking to get into more Bitcoin. I've held some for some time, but this is more of a longer term position. It is still pretty high up on this chart. However, this consolidation is a really strong and tight handle if you look at it monthly. So as it breaks, or if it breaks this downward trend of the handle, I will probably look to trade it as well a little bit to the upside. So that's one trade. And again, I'm looking for a break of this channel here. You can see on the left-hand side of the daily chart. So just breaking this channel right here, this red line. So that's what I'm looking at for Bitcoin. And I trade it through, there's ETFs you can trade. You don't have to buy futures or go on any kind of platform and buy the actual coin. You can trade it from a lot of different angles. So back to healthcare. So there are a couple of, if you look at across the healthcare industry, it is pretty strong in general. This is the XLV, which is a healthcare ETF. And you can see it's been relatively strong over the past couple of years, several years. That's monthly. Going back to weekly, it's made a recent kind of push up in the last several months, like last year rather, and it's been consolidating slightly. If you go over to the daily, and it's coming back up. So I'm looking for some opportunities in healthcare. A lot of the pharmaceutical companies are already kind of high. So we've got Lilly, again, excuse my chart drawings, Lilly, Merck. Merck has kind of fallen due to some news, but we have Eli Lilly is a big one. Johnson & Johnson has an opportunity here if it breaks above this this channel. Novartis also doing really well. But what I'm looking at is Humana, which is an insurance company, actually. So I'm looking at insurance companies, but especially this one. It had some bad news, actually, recently about Medicare potentially downgrading the Humana Medicare product that it offers. I don't really know that has too much impact, shouldn't necessarily have too much impact in the short term anyway to its stock price. And so obviously you see there was a gap down on that news. and the stock has been kind of pushing its way back forward. As it's pushed into the gap fill, actually, I did purchase some on Friday, coming into as it moved up above into this gap. This first day into the gap, which was Thursday, I believe, I did not buy it. I wanted to see confirmation, so I waited till day 2 of the confirmation of push into the gap. My first target is the gap fill, actually up here. If you look at this bar, the low of the bar is 276.80, and I like to put an alert a little bit ahead of that just so I can kind of see if it's getting close and do I need to adjust any kind of limit orders that I have to sell the position. So the stop on this position is down here at the bottom of this range, like just above this hammer in the chart. So I have a 1 to 2 risk reward on this particular position, and it's active. I entered it on Friday, and I plan to hold it through next week, through this coming week, anticipating that it would fill the gap. I think it may actually do better than that, but I think my first target is going to be this gap fill because it has such a strong downtrend from even before the news. I mean, it could come, up to this 300 area, which is my second target. So if you take a look at, the trend on the longer chart here, you've got this this larger downtrend here from earlier in the year. So it could potentially get back up into those areas as well, maybe even hitting that line. But if you even take the prior low here around 300, that could be another target. So Humana is a good risk reward in my book for today, for what we can find right now. And it's one of the few stocks that's actually down and giving you an opportunity to get back into it, as healthcare seems to be a good sector at the present time. Okay, so one other one, actually not really healthcare, but somewhat related to health, is Weight Watchers. And I know this has been historically an interesting volatile stock. However, I think it actually has a pretty good chart right now to consider from a risk reward perspective again. So taking a look at this is its weekly. It's of course come way down from where it was. It actually recently had some news. Otherwise, I probably wouldn't consider buying into it without this news, to be perfectly honest, because it's just been on, such a huge downtrend. It's lost a lot of its value with the GLP drugs coming on the market for weight loss. So just taking a look at weekly, you could see this weekly bar from last week popped up on really high volume, which is a good first indicator, right? So it's a good, hello, I'm here. You take notice. And then if you go over to the daily, if it has a good amount of volume as well, and it's starting to consolidate, right? So what I'm anticipating is potentially some consolidation and maybe even down into the 140s, and then potentially, if it does bounce and turn around, that's a really good potential. Obviously, you don't want it to go back below this 128 level where it gapped up. It'll be a good stopping point to have somewhere around 128, or even the gap at 119. So the news here was that it has gotten approval to distribute. I can't remember, one or the other, manufacture and distribute, or just distribute its own GLP-1 or compound GLP-1 product for its customers. So it's like an add-on to their service, right? So if you're using Weight Watchers and you also want to supplement it with a little bit of generic Ozempic, as an example, you are able to do that now with Weight Watchers. So you get the benefit of coaching plus, the food guidance, but also you have that backbone of this GLP-1 ability to get the GLP-1 drugs as well. So it is actually really positive news for Weight Watchers. So I think it is. So I'm going to be taking a look at this, and I'm waiting. My entry point would depend on what it does this week, right? So let's see how the weekly chart pans out this week. Now, if it just goes up from here, I mean, not a bad not a bad buy point if it, after this consolidation ends up breaking above this, 200-day moving average and pushing into the 240s, etc. First target here, would be probably around 370, which is kind of the prior low. It's a little hard with these charts that have gone down so much, but you can use things like Fibonacci retracements or, prior lows and highs, which is what I've done. So these are the ranges that I have looked at for this stock. So 235 as a breakout, 370, 523, then the 50%, and so on. So Weight Watchers, I think it's a good one to watch as well. No pun intended. The last thing I want to talk about is going to be China and the Chinese stocks. You all may have seen that China went absolutely crazy the past few weeks due to some news from the bank in China, the central bank in China, cutting rates and injecting liquidity into their market. So you can see the really strong gap ups day after day after day, and with high volume. So you can see the really high volume here, higher than, I think many years. If you want to look at the movement in this stock, in this ETF, which follows China, it is very much an unusual thing. So just taking a look at the weekly here. Now, I think it's a good thing. I do think that, this is positive for their stocks, reducing the value of their currency, so to speak, by injecting liquidity, reducing rates. So taking a look at this weekly chart, what we want to look at is what is it going to do next, right? So it's gone up, it's come back down slightly, is, looking for some consolidation back down, maybe halfway. A little bit more than halfway is also fine, as long as it doesn't get into this bottom third. And then a bounce, maybe at 30, 31, back up to prior highs and beyond. So not that it's going to happen as fast as this. So what you want to look for is maybe some consolidation, or look at some Chinese stocks individually. So that's what I actually did last week, is take a look at some of these Chinese stocks, Chinese companies that could be potential pullback bounce plays. So one of the companies, so obviously there's Alibaba, JD.com. Again, sorry for all the drawings, but one that I looked at is BILI. Let me just remove the drawings so you can see this a little bit easier. So this is a company that is actually gone up quite a bit and retraced almost to almost halfway back. So taking a look at this daily chart and the weekly chart, let's zoom in. So you can see overall, this stock has come down quite a bit in the last 2 years. It's had a pretty long downtrend, and it's basing for a long time, which this is a really good sign for, consolidation strength, and the next move should be pretty high conviction for, or at least it should stick if it has a good basing pattern. It's more likely you're also at the bottom of a range, so you have a really good risk reward also, which I really like about the stock. So here, it's made a V bottom, and it kind of came down, but not all the way down to the prior low at 823. It did go up slightly here, and then retrace, with not too much volume, but this high volume from the last few weeks has, of course, broken it out of this range, and it's come back in it. So the next thing we're looking for is consolidation and movement back up. So I'm looking here on the left side at the daily consolidation. So as it's coming to the 20 moving average, I'll look to see how far it goes, if it goes down, if it can maintain this range that it's in. And then at the breakout, if it can break out back above this 2364 level, no, not right there, but up here, that's when I'll look to maybe add a small position, just to see if it continues or if it comes back down. it hasn't been really long enough. Like it really isn't that long of a consolidation. I would like to see a couple weeks of it consolidating before getting in. So I will be watching it. And I might add a small position if it breaks out and then hold until I can see what happens over the coming weeks. So really this is kind of very sudden movement, but would like to see a little consolidation and then a move up. And so that's what I'm looking for with BILI. And honestly, BABA, JD, all of those stocks, all those stocks that are the large cap Chinese companies. So that's a really another country to look at that has the potential, of the stocks kind of making a comeback a little bit towards the end of the year. And I think that's all that I have for today. I know there's going to be there's going to be some potential in the technology sector as well. I will go into Tesla just because it's in the news and it's really popular. So I'll go into Tesla for a moment and what I think is the wrong one. What I think about this stock and what I've been doing. Again, lots of drawings here, but I think overall you can see. I'm going to pull the monthly on Tesla actually, so you can see it a little bit better. So pretty big, wide consolidation over the past couple of years. Settling down, I would say. So you can see big up move, big down move, medium up move, medium down move. And now we're kind of getting a little smaller. So if it continues to consolidate in this wedge here, this monthly wedge, it's something to look for from the perspective of a bounce at this longer term trend line from 2019. So definitely something to keep an eye on as a potential buy point for Tesla. So just keep an eye on this longer term trend line for a buy. I will be looking for an entry point here if I don't get one before that, because I don't know that it's going to come all the way down, but it might. So if it does, that's a really good opportunity, even if it kind of around 178, 177 is also a pretty good opportunity above this, these hammers down here, this consolidation. If it doesn't come back down there, I think there's a second option for Tesla. If you look at the daily and even the weekly on this chart. So obviously two kind of really volatile months, several months have been volatile in the stock, lots of news, lots of, opinions. It had an event last week, as we all know, where it revealed its robotaxi and bus, and you can see it fell on that news. Now, I don't see why that was bad news. I think that was really good news for the company. Maybe not exactly what people wanted to see, but I think overall, in the long term, this is a good thing for the organization. So, I'm actually looking to see if it does continue to sell off. Really looking at that as a buying opportunity. I mean, 180 is also a good buying opportunity if it makes it down there, but it could very well just bounce down here at this smaller, shorter term trend line and go back up and break out of this pennant or flag pattern or range that it's been in. So that's also an option that could happen. So those two things are what I'm going to look at for Tesla. I definitely want to get into Tesla long term. I'm just looking for a better price. So if I can get it down at 170, 76, 180, great. If I can get it down even lower, 158, 160, wonderful. I will probably, if it does keep going down, I might be dollar cost averaging into it. But I'm really going to look for a turnaround up before I buy it. And then if it doesn't turn around, I'll just continue to look for a bounce at lower levels as it potentially continues to sell off over the coming week if the news continues to be negative on it. So that is going to be the last thing I talk about today. So look forward to your comments, to your thoughts. I'd love to hear what you want to see, what stocks you're interested in, and what you'd like to see a little bit more of, if there are any sectors or industries that you have an interest in, or any stocks even. I'd love to hear from you. Thank you for your time. Have a great night and happy trading.